Hello and welcome everyone to another episode of All Things Money. I'm your host Fatima Attarwala. With me today is Atif Salim Malik, Chief Operating Officer for GS Bank. Now, the topic today is SME financing, and we could have many guests for SME financing, but what makes Atif really special is that he was one of the first employees of SMEDA. SMEDA is the main body for small and medium enterprises. Its full form is Small and Medium Enterprises Development Authority. Hello, sir. Welcome to the show.
Hello.
So, we have heard this so many times. SMEs are the backbone of the economy. We also hear how, though we have a lot of SMEs, they have a lot of challenges accessing finance. So, in very basic terms, why can't SMEs access finance in Pakistan?
It's basically the problem is multifold. It's not something that I can say that there's only one issue. It's on both sides of the divide, the SME side as well as the financial sector side. Now, the way our economy is structured, if we start talking about the supply side, which is the banks, the way our economy is structured, government takes the lion's share in terms of borrowing. So that's basically sovereign risk, and banks are very comfortable lending to government because they don't have to go through the pains of underwriting. So why take exposure? Why take the pain of going out and underwrite risk of SMEs which don't have financials? They're very disorganized, informal structures. So I think that's basically something which is contributing towards the whole problem. Now, if you go into numbers, Pakistan's GDP is around what, 114 trillion rupees, around 400 billion USD. So out of that, total share of private sector credit is what? Hardly 10%, 8.9.
6 to 7%, I think.
Yeah, less than 10%, hardly 10%.
10%, yeah.
So 6 to 7%. So we are basically, we have this 10 by 10 matrix problem, which is everything is under 10%. So SME share of total private sector lending is again 6-7%. Then if you look at consumer finance, that is also under 10%. So everything is basically simmers down to that particular aspect that banks have become complacent, financial sector, and that's primarily not, banks can't be blamed for doing that because the economy is structured like that. So it's a fiduciary responsibility that banks are managing. So they basically pick the area for financing where their risk is very low and returns are decent enough to keep them sustainable. So that's basically the challenge.
Banks are one of the most profitable sectors in the economy. When we came out of the pandemic and the crisis, the one sector that did really well.
Still working at an effective tax rate of over 50%.
They are the ones making the money, so they are the ones paying the taxes. I know, yeah, taxes are a pain point. We can have a whole debate on whether banks are taxed or overtaxed, but I get your point. Why lend to SMEs when there's no collateral, when there's no books, and it's so much easier, simpler to lend to the government and make money, right?
And one more thing, the countries which have actually focused on SME development, their share of private sector credit is over 20-25%, like countries like India, Bangladesh. So these countries have enabled the growth of SMEs and facilitated. I'm not saying that there are no ways and means of underwriting risk for SMEs. We at GS Bank, overall banking sector, if you basically, as I mentioned, it's only 6 to 7%. We have a share of over 20% in our total asset portfolio. So we are a mid-sized bank with a total asset book with a total balance sheet of 600 billion. And our 20% of advances are towards SMEs. So it can be done if you basically have the right kind of people, if you basically take this sector as an important part of the financial ecosystem, then basically there are ways to underwrite risk in the sector.
Absolutely. I mean, my next question was going to be that do banks not have a responsibility to address this sector, which is highly underfinanced? And as you mentioned, GS Bank has a 20% portfolio of SMEs, so why can't other banks step up their SME financing, especially if they're larger banks than you?
No, again, larger banks, the issue with larger banks is that they become complacent in terms of, again, it comes down to the same thing. Larger banks have a very wide deposit base, okay, and their cost of deposit is very low, because of large base of non-remunerative deposits, which basically on which they don't incur any cost. So their spreads are very good by investing in government paper. So again, low risk, sovereign risk, you don't, and then there's so many other technical elements which lead to lower costs. So that's the reason that they are not focused on this area. But recently, with the efforts of the government and State Bank, there is some positive movement. Overall private sector credit, although it has not grown, but SMEs was around 550 billion, and now it's over 650 billion, close to 700 billion. So there is some focus and impetus provided by the government, and banks are now, even larger banks are taking interest. So things have improved over the last couple of years, I would say.
Yeah, I think the latest number for June that I have is around 277,000 borrowers were SMEs.
275,000
back. Yes, so it has moved upwards. But then again, 277,000 borrowers in a month in a country which is among the biggest, most populated countries in the world is a very small number. We are operating from a low base effect. So as we mentioned off screen, when there's not a lot of done in a field and then there is improvement, the numbers jump up because of the low base effect. So the room to grow is a lot. What can the government do beyond the FinMin going on and saying, lend more? What can the government do to increase, say, JS Bank's portfolio from 20% to 30% of SMEs?
Yeah. No, we already, I would say, given the existing state of affairs, we are already overexposed in this sector. So it's primarily, other banks or other financial institutions that have to contribute more. Because if, for example, big 4 or big 5 banks in Pakistan, their share goes over 10% in terms of their overall advances, their exposure to SMEs, then you can very well imagine this number that you're talking about, which is like currently around close to 700 billion, this would be double in only a couple of years' time. So that is something that we have to understand, we have to go. Good thing in the economy is that interest rates have come down. So the spreads that were there a couple of years back are not there anymore. Discount rate used to be 22%, now it's 11%. So this has actually squeezed the top line of a lot of financial institutions, which are evident in the results as well. So that is going to put a pressure on the institutions to explore avenues which are unexplored and untapped. But at the same time, there are structural issues with the economy. For example, our informal economy is too big. M2, which is the money supply, that's basically indicator, that's around 25-26%. Okay, so that is the money that stays out of the banking system. So cash, if you basically want to enhance the access of SMEs towards to formal financial sector, cash has to come down to a bare minimum, because the challenges that I've mentioned earlier, and you yourself mentioned that these people don't have collateral, these people don't have books. I think collateral is secondary. Primarily, the issue is that bankers are not accustomed to underwriting risk of SMEs on the basis of informal financial reporting. So once this cash thing is sorted out, and there are a lot of efforts going on at the government level to reduce this prevalence of cash. But that's going to take slightly longer time. But it's again, these things are something which would help the financial institutions as well as the SME to become a part of the formal economy. And then they would have greater access to formal financing.
When we talk about cash, and yes, there has been, I think even in the budget speech, there was a lot said about the informal economy and the cash-based economy. But if you're a credit card holder and you're getting messages from the FBR mentioning how much you spent on your credit card, congratulations for spending, say, $1 million this year, and reminding them to file taxes, nobody is incentivized to be part of that. In fact, I'd rather not have a credit card if I'm going to get a message like that. I'd rather pay by cash. Similarly, in Sindh, there was this popular vote that if you go to a restaurant and you pay by card, instead of paying 15% tax, you pay 8% tax. A lot of restaurants are not following that. In Punjab, I think it's better. In Sindh, it's not. So there are more incentives to stay out of the formal economy, and I think the efforts by SBP and the government authorities to formalize the economy are backfiring. So if we say that we want the cash economy to come down and only then there will be greater access to credit for SMEs, I think we have a catch-22 situation happening right now.
No, you're right, but again, credit card is not a good example because credit card market is very small in Pakistan.
Tiny,
Okay,
and even the tiny overtax market doesn't want to stay there.
That tax notices to people on credit card transactions should not scare people who are using credit cards.
I'm a credit card user. I'm telling you, it's scaring me.
Why?
Then
Why?
they should
Because,
know.
You
And I'm a
basically
tax
salary,
filer.
your
Yes,
tax is deducted
absolute
You don't have
tax
anything
filer.
to hide. You don't
I
have
don't have
skeletons
anything
in
to
your
hide.
closet,
You're
huh?
absolutely right. And even still, it freaks me out. It freaked me out. It freaked my husband out. You do not want to know that the FBI is tracking your moves so well.
No,
So it's better to stay out.
No, but the thing is that
If I can go on Upwork and earn a few extra $500, I'm not incentivized to go tell the government that.
But I think credit card is not a good example. But the other thing that you mentioned that they've incentivized merchants and customer, so that's a good thing. I take it as a very big positive that they have reduced tax rates on formal transactions,
which is not being implemented.
No, that's something again. It's now there are a couple of things in Pakistan. The major challenge with a lot of government initiatives is enforcement. Okay, so certain laws are very good, okay, but if those are not implemented, those are not enforced, obviously the impact is not going to be widespread. Everybody knows that if you basically don't obey the traffic signals, you are supposed to be challaned, you'll be fined. Yeah, but here, if you basically violate a signal, nothing happens. You know that you're going to get away with that. But if you do that on a motorway, over speed, you know that there's a person sitting there with a speed gun, and that's going to monitor my speed, and then I'm going to be fined there and then. So what do? You become vigilant. You start observing the law. So enforcement is important. So that is, I think, our weakest link here.
Absolutely, I agree. Implementation is our weakest link. Otherwise, as you said, there are a lot of initiatives taking place, but they're not bearing fruit because lack of implementation, lack of political will for that implementation. So that comes back to an earlier argument. You said that GS Bank has a portfolio of around 20% plus for SME borrowers. If the bigger banks were to follow suit, then there would be a lot more done in the economy for financing SMEs. And the government can incentivize it, but if they cannot implement it, then again, there's no progress being made.
No, I think there are certain programs in terms of financial incentive as well offered to customers. There's a scheme, again, it's been there for quite some time now, Prime Minister Youth Scheme. So that's basically something which is incentivizing borrowers. It's a subsidized lending, and then banks basically get their spread by the government as a subsidy. So that's a good scheme. But again, very few banks generally take interest in those schemes. In our case is different. Okay, we have a very different strategy for SMEs. We are a mid-sized bank. Our forte is our presence or proximity. You know what? We have very limited branches. Now, big banks have around 200 branches, 2,000 branches across Pakistan. We have a network of 325 branches. Okay, so we have to operate in our niche. So what we do is we basically operate very close to our customers in niche markets, niche areas. And in order to do that, and service is the only differentiator which can help us sustain our presence. So in order to achieve that, what we have done is we have created a separate SME function. Okay, there are over 100 people which are working on the SME business. And they basically look at the funded requirements. When I say funded, these working capital, long-term financing requirements, as well as non-funded requirements. These are like, trade business. So that is the kind of strategy that one has to put in place. And then there is a supervisory committee of the management executive committee, which is called the top level management team, which basically heads that. I head that committee in order to ensure the achievement of the numbers, performance, progress, risks and everything associated with SMEs. So it has to come from the top. If the president and number two in a financial institution, they take interest, it happens. Then you basically need to provide requisite resources to the teams on the ground and give them a proper structure. So unless that happens, no bank would be able to excel in this field or do the lending as needed by the economy and by the SMEs.
So face time with your niche markets is important. Having people on the ground is important. Now, in an era when online banking is a thing and they are having, digital, more digitization, more apps. Yes, but if you really want to reach the small barber across the pool, as you were mentioning out, then you need to have a physical presence there. So if maybe the bigger banks would have more outlets in smaller areas, do you think that could help with SME financing?
I don't think that more outlets is the right solution. It has to be a hybrid approach. Nowadays we talk about phygital, which is like physical presence with your branch network, a customer touch point, and supplementing it with digital channels. So this is what we have also tried to do. Physical presence is required where customers require a lot of services like 360-degree financial services, where they have a funded facility as well as they require non-funded facilities, because that requires a lot of interaction with the banks. So for that, I think still at some point in time, banks or at least we are exploring how can we digitize that journey, which is trade finance journey. But at this point in time, it's more paper intensive. So I think that's something which requires a lot of physical interaction. But as far as digital is concerned, we again in our own capacity, another interesting phenomenon is the data that we have, all the financial institutions. There are over 2 million business account holders with the financial institutions, but the number of borrowers is what, 270,000? So only 10% of that. So you've not even scratched the surface. So banks generally are not used to digging and analyzing their own data. So we did that, tried to do that, and we were able to figure out that there are almost like 15,000 entrepreneurs or SMEs within the bank who don't have any financing facilities from us, but they bank with us. So we started analyzing their numbers, and then we rolled out a digital financing program, which was like on the basis of a click, you could get unsecured financing up to a certain limit. So that we did, and it worked very well. The portfolio performance is very good. So again, as I said, it's a combination of multiple things. Physical presence is required in our case. Then it has to be complemented with digital. So it has to be a hybrid approach.
So if the bigger banks or if all the other banks were to just dig down into the existing client base, they would find a lot of SME financing just ripe to be taken, low-hanging fruits. They don't need to go outside their customer base. That's what you're saying.
Yeah. Unfortunately, again...
they don't need to do that though.
No, they don't need to do that. But, there is, again, as I said earlier, the economy is slightly, has shown signs of recovery. Interest rates have come down. So there is going to be some, some movement towards that end, where banks would explore areas which would offer more lucrative margins. And, SMEs offer good margins. Obviously, risk is slightly higher.
So they have to pay interest rate higher, so there's more margins.
Yeah.
Higher risk, higher returns, obviously. So we have mentioned this multiple times in this podcast that the interest rate was 22%, is down at 11%, but 11% is still pretty high. Private finance, private credit hasn't picked up a lot since the interest rates have come down, because at 11% it's still double digits. In fact, the SBP has not brought the interest rate down in the last many quarters.
Yeah, I think I would agree and slightly disagree with this concept. I've worked with SMEs for quite some time now. I've done research on SMEs as well. I think that their margins are very high. Okay, 11% is not a rate which would hurt them. Okay, it's basically what hurts them is their financial management. So which is not very good. Okay, because if you basically take into account the kind of gross margin, I think, they are pretty decent there in the SME space. And if you basically start analyzing their cash cycles, it's pretty small as compared to larger entities. So they are able to, make a decent amount of profit, bottom line, if they manage their books efficiently. But because of the inefficiencies within the system, unfortunately, that doesn't happen. And then again, because of lack of, they currently, if informal space, they pay up to 40%, 30% per annum, even in
With
this
loan
day and
sharks,
age.
it's crazy,
Okay?
yeah.
So what is the reason that they're willing to do that? And then even, after paying that much, they're still able to survive. So that means the margins are there. Okay. But again, why do they access the informal channel? It's basically convenience and ease, access to that person, that entity which is going to lend them without asking a lot of questions. So the journey is very simple, the experience is very good. You must have heard about these RTs, the middlemen in the agri space. So this is a full, complete financial system that is at play in the agri ecosystem. And banks have been unable to replace that. Why is it so? The reason is that, that person, the arthi, the middleman, in a rural area is accessible to the farmer 24/7. He knocks on his door at 2 a.m. in the morning and wants some money, that is given to him immediately.
And the money can be for anything,
Yeah,
sick cow or
exactly.
daughter's wedding.
Yeah,
So yeah,
exactly.
no question asked.
So accessibility and convenience, ease of accessing that money. Obviously, there are strings attached, and they at times become very end up not being very good. But then majority of the people still go to them. So that's basically something that we need to, as a financial sector, we need to actually do some introspection that where can we provide more, we can come up with innovative means and ways in order to underwrite the risk in the sector. And that can be done. As I shared some examples with you, that we are sitting on a lot of data. We don't, as a nation, I think we don't like data and analysis. So if we and we keep on talking about the way things are moving in terms of artificial intelligence and all these things that are happening, unless or until we start loving the data we have and start analyzing that, we won't be able to plan our future.
I cannot agree more. As a data-led journalist, as a business journalist, I do think that people get very bored when they hear numbers. They like a simpler narrative better. And absolutely, I'm sure if the bigger banks or any banks were to dig into their own customer base, they would find customers. If you can pay 40% to a loan shark, you can pay 11% to the bank or whatever the interest rate is. So if you look at the current numbers of the lending to SMEs, about 50% of the lending is for working capital. And this is an improvement. About a decade ago, 3/4 of it was for working capital, which basically means that a business is borrowing just to stay in business and not to grow. Now, if you have a small barber shop and you have 5 sons and you want to give off your inheritance, but you're only managing the shop, there's no other franchise, there's no other outlet, it's just working capital. Obviously, when the next generation, it will get divided. So we need, for their future wealth, they need to be able to grow their businesses. How can we incentivize SMEs to borrow for not just working capital, but for fixed investment, for trade finance so that they can export?
No, trade financing is something that they have access to, although in recent times the regulation has become pretty stringent, and there are certain challenges, but I'm sure those are going to be ironed out in the next.
Because trade finance, so the half of it is working capital, and then you have fixed investment, and then
trade finance, and then you're talking about working capital.
I'm
when
saying,
you say trade finance, that's basically something which is in banking. Nobody एक specific उसके लिए LCs or documented.
Basically, I'm saying that the
import, export.
Yes. So what so yes, I'm talking about services, and trade finances would be for industry. And industry.
I get your point. You're talking about the balance that is not there in terms of long-term financing to the sector, so that they are able to build their capacity and graduate to the next level from micro to small to medium.
Yes, absolutely.
Again, it's not a very easy problem to solve. That goes back to the same thing. It's basically risk-averse nature of the financial institution, because the longer term exposure requires more effort in terms of understanding the business itself. Okay. So, and the transaction cost of doing the same thing for an SME, which requires, let's say, 15-20 million rupees in terms of loan for a long-term exposure, and a mid-sized commercial entity or a corporate which requires 500 million for over the longer period of time, is basic transaction cost remains the same. So what would
How
the
do you
logic tell you? That focus on that 500 million, although the spreads are going to be slightly lower, but the effort and time that you're going to be spending in terms of getting on board a 20 million loan for 3 years or 5 years is much higher. So that is how things work. So the only thing is that, you know, if you base, and this requires a lot of specialized analysis for SMEs, because it requires extra effort. You have to understand their business, you have to understand their financials, you have to understand their cash flows. So unless we are willing to do that, we won't be able to take exposure.
So while there's easy money to be had, why bother?
That's
There's
the
so much
catch
in.
22 that
That's the
we
catch 22.
started our discussion with.
Yes, that I haven't. There is
are
no solution to
structural-
it
No, but the
that
thing
I can
is that,
see.
you know, it's a genuine problem. There are structural challenges with the economy, and that's what everybody keeps on saying. So unless or until we start not, and I'm not saying that any minister would have a magic wand to fix those issues in a year's time or 6 months' time. But the journey has to start. We need to take small steps. So that, I think, has to happen sooner than later.
Absolutely. There have to be policies, and the policies are there at the government level. They have to be implemented. There has to be a profit motive, a money motive for banks to lend to SMEs. Otherwise, why should they? So one other challenge that I often see bankers put forward is, say that you have an SME, a small business, and they say, we cannot pay you back. It's a profitable business. Say it has borrowed 1 million rupees. It is saying, see, I can return maybe 400,000, I cannot return 1 million. Even if you know that it's a profitable business, there's not a lot you can do. You cannot take legal recourse for a small amount because your legal fees would be higher. So in such a circumstance, what can the regulator do, or what can the banker do to, make sure that the SMEs who can pay back are paying their loans back?
No, I think, again, a very valid point, which is not only applicable to SMEs, even beyond that. So foreclosure laws is a challenge in Pakistan, okay, and that's basically a challenge even for housing finance. So that's the reason housing finance is very low. The penetration is very low there. So that's a challenge, and I think although there is one particular regulation which basically allows the banks to dispose of the property of a defaulted loan and settle the loan amount, but unfortunately that has hit regulatory snags in terms of delays at the court level. So I think it's become a complicated kind of a problem. So foreclosure definitely is a problem, but that said, that's not the only challenge in extending financing to SMEs. The average loan size of SME financing is still very low. So a lot of SMEs can be catered to if banks start structuring proper functions within their functions looking after SMEs in their banks, and which basically start analyzing those SMEs. So I think a lot can be achieved without taking that collateral. So that is also an avenue which remains unexplored. 3-4 years back, State Bank basically rolled out a scheme called SAF, which was unsecured financing for SMEs. We did around 5.56 billion of disbursements in that scheme, and our default rate was under 1%, and that was basically an unsecured program. So I think it's a challenge. Foreclosure is a challenge in Pakistan, and that is not only limited, as I said earlier, not only limited to SMEs. It's also affecting other areas, as I mentioned, housing and other financing. But that is not the only issue. So still there are avenues which can be funded by the banks effectively without a lot of impairment.
So it's my understanding that program is no longer in function by the.
So that's basically something that has come to an end. The subsidy is not there anymore, unfortunately, because we are in the IMF program, and that's.
And IMF does not want SBP extending subsidies. Yeah.
So that's basically something which is.
Yeah. So I mean, yes, the SVP had rolled out a lot of subsidies, a lot of programs, be it for, I think, solar panels as well, or EVs. And so there were a lot of initiatives by the SVP that had gained traction that can no longer be put in function because you are in the IMF program, and IMF does not want SVP to be the one giving subsidies, or Pakistan in general to be giving subsidies. But in this sector, without subsidies, as you said, there is no profit incentive. So why would the banks take it
No,
on
even
themselves?
without subsidies, there is, SMEs, as far as I am concerned, or JS Bank is concerned, I think it's a profitable business for us.
But when you have easy money, why go
No,
after
but
it?
again, as I told you earlier, that for me, that easy money doesn't...
Because you're a mid-sized bank.
Yeah, because I'm a mid-sized bank, my cost of funding is higher as compared to larger banks. So by design, I have to actually explore these avenues. I have to be, or we as a bank, have to be constantly on our feet, very quick on our feet. We need to actually keep on thinking, explore new markets, so that we are able to have a sustainable bottom line. So that's basically our challenge.
Great. Oh, actually, one more thing that I don't think an SME discussion can be fulfilled or completed without talking about lending to women and the scope of SME lending for women empowerment, for small women. And I think there have been programs in the past that have focused on female lenders. So maybe you could talk about that?
Yeah, I think that's an area where we focus as well. We have, again, there's an initiative of State Bank which is called BOE, Banking on Equality, I guess, if I'm able to get it right. So we have a team working on that. So we track those numbers in terms of deposit relationship, financing. We have certain specific programs for women entrepreneurs. And we also try to collaborate with the women industry associations in order to identify good borrowers from there, so that all progressive borrowers who can be further, excuse me, labeled by the bank to grow further. So that's something which is also at play, and that is tracked on a regular basis.
So what has been the uptake of that? And
again, it's very small, nothing to write home about, but at least we are trying to venture into this space as well.
So I think that's one thing I'm always, so much of it appears to be performative rather than bringing proper change, transformational change in the economy. So you have these programs in place and they do work, but for a small group of people.
Again, this whole thing spirals down to that, when you say transformational change, this is a very big word. It requires a lot of effort. So there are 3 levels at which things have to be fixed. One is called the meso level. Okay. In my introduction, you mentioned about SMEDA. So that's basically the meso level where you come up with institutions, you basically come up with organizations which show the economy or set the direction for the economy. Okay. Then under that, there is a macro level where you basically work on these regulations, you tweak those regulations, you become an enabler. Okay. And then the last thing is micro level. So I think a micro level is where the action is, the SMEs themselves. So I think activity has to happen at all 3 levels, meso, macro and micro. So if you basically come up with policies or organizations or institutions at the top level without including the base, which is micro level, without understanding them, then the institutions which are going to be formed, they are not going to help the economy or the SMEs. Then at policy level, if again there is a disconnect between meso level and the SMEs, the policies are not going to be aligned with the actual requirement, and they would not actually pinpoint on the problems and offer the fix that is needed. And then obviously micro level, if basically in terms of a very informal economy, there isn't any will at the bottom level to basically graduate to the next level from micro to small to medium. So if that is not there, then the situation is not going to be very helpful, and that is, I think, our problem. Majority of the SMEs also, they are family-owned businesses. They lack ambition. They basically don't want to enter into the formal space that, वो tax वाला पकड़ लेगा, ये हो जाएगा, वो हो जाएगा. हालांकि, by doing that, a lot of, actually the growth is being compromised. So it's a very complex kind of a thing. So you basically need to develop this ecosystem.
And for ecosystem, all the stakeholders have to work together.
Yeah.
So the
macro
yes.
and micro.
So we can have the policies, but they need the regulations. We can have the regulations, but they need to be implemented. It can be implemented, but the people themselves have to have a demand and the desire to be part of that economy. And right now, I think there is a lack of ambition at all levels. So. Anyways, great. Thank you so much for coming on my show, sir. I think, at least my understanding of SME financing has increased a lot. And thank you so much for a frank discussion.
No, thank you very much for having me, and I thoroughly enjoyed it.
Great.